We are live. Good morning. Welcome to Trades by Bren. Let's get some beats going. We're day trading the S&P 500, but of course we got to do it in style. We had some data come in. We had a report come in. So CPI, I believe, this morning. So the market's reacting to that. A lot of people like to look at these reports and analyze what is going on, right? If the Fed makes an announcement about interest rates or something like that. This was a CPI data. It's like, okay, it's trying to speculate, but we don't really care. We really don't care what we think about the report. We care what the market thinks about the report. So this is one sort of strategy that I like when it comes to how to deal with news, right? Because I'm a technical trader, which means I look at the chart and I see what the data says. I don't like to speculate. I don't like to think I'm smarter than the chart. Do you think you're smarter than the chart? Do you think you're smarter than the markets? Instead of speculating on what you think the report means or how the market's going to react, what if you just look at the chart and say, okay, what do investors, what do traders, what do the market makers, what do they think about the report? Looks like they like the report, right? Look at the market. Let me change my screen size here, so you guys, I realize, can't even see. There we go. Okay, so now you can see in the top right hand corner of my screen, we've got a very strong breakout. Okay, so that's the kind of breakout where if you buy above, you'll probably make money. But it is early, right? So I want to think this through a little bit. Also, these bars are very big. If you look at the bottom left hand corner of the screen, that's at 11-point ATR. So the only downside to taking a trade like this, why stop? Right. Your stop's got to be down here. The bigger the bar, the bigger the risk, right? So that's just something to keep in mind. But this candle right here closed above so many candles to the left. It's likely that'll attract some buying. Let us know where you're streaming in from in the chat. Post your city. That's rule number 1 of the chat. If you're new to my chat room, let me share the rules with you. Number 1, introduce yourself and your city upon entering. Number 2, good vibes only. No exceptions. And number 3, support each other, encourage each other. Don't just talk to me, talk to each other. We're building a community here. Why do I say that? Because we're building a community here. And I invite you to join us. Life is good. We're day trading. And we're grateful for that opportunity. Big bull breakout. But waiting for follow through here. The reason why I like this is because the second bar is way bigger than the first. So that I like. We're going to play with a couple different profit targets here. One would be here. I like that. That will put us at about 20 points. One thing to keep in mind, though, is that on the open, there's a much higher chance of reversals. And so far, technically, we've got a trading range because big up, big down. What I like though is that the moving average held all through here. That's yesterday. So might want to consider a wider stop. But I don't like to move stops. So if this trade doesn't work out, probably just take this stop out and reevaluate. A little bit of a pause here. Testing the low of 1. You can see there were buyers there. Why? Because look, we went down, touched it, boom, there were buyers right away. That's why there's that tail in that candle. Welcome to Trades by Bren. We're day trading. Shout out to Sylvian. Shout out to Randy. Shout out to Aquino. What's up, Aquino? Welcome back. Shout out to I'm Clutch. We got some repeats. Welcome back, guys. If you're new, welcome. So bulls failing to close above the high of that candle. Although it looks like we did get a close slightly above the open. Although maybe not. Shout out to my man Big A from San Antonio. San Antonio in the house. We keep getting Texas. Texas always represents strong in my live stream. I don't know what it is, but Texas represents. So guys, if you can see on my chart, I've got the bull breakout marked. So the question here is, can the bulls close above this guy? We want to close above this guy. That's what we want. And we got to wait 3 minutes on this candle, but as you can see, we really start taking off as soon as the candle opened. So we're going to pay attention to how long this candle spends white. Okay. On my chart, white's green. On your chart, it's probably green. But I like it black and white because it helps me keep my emotions real even. Because with trading, you want those emotions real even. The second you get disappointed, excited, frustrated, happy, anything like that, anything that brings you off your center, you very quickly will start making stupid decisions. Guys, tell me how my levels are. Do me a favor, tell me if the music and the microphone are sounding good. I am Clutch, exactly. Emotional damage, yeah. It's one of the things that makes trading so different than anything else, because usually in life you want to celebrate, right? Or you want to, you know, you want to like have compassion for like the suck, right? Like most of the time in life, it's like there's room for feelings, right? In trading, it's like there's room for feelings, but you have to really know how to manage your emotions. It's the most important thing. It's more important than the trading. A lot of people can figure out how to read the patterns. All right, level sounding good. See if the bulls can close. Struggling. See that? Let's wait for this candle close. Bulls need to close above something. 30 seconds to do it. 29, 27, 26. Big A, how's it sounding now? This is the trading channel with the best music. If you want the best trading, go somewhere else. If you want the best music, come here. Okay, so I'm looking for close above something. Look, A close above 1. So I like that. That ugly tail on the top, I don't like. So we'll consider trailing our stop, right? Reducing our risk here. But the fact that this guy closed above 1 is good. Switching to a higher time frame. That's 15-minute chart. Okay, levels are sounding good. Levels are sounding good and we're in profit. That makes daddy happy. But anything goes here, guys. Anything goes. Like I said, we're not celebrating until the trade is closed and the money's in the account. Also, keep in mind, this is something I remind myself of. If I'm going for a 20-point trade, okay, that's a big trade. It's not going to happen in 5 minutes. It's not going to happen in 10 minutes. It's probably, I mean, it would be a very rare case if it were to happen in 30 minutes. For the market to buy high, right? We just bought high. We didn't buy down here. We bought up here. If we bought high and we want the market to go 20 points, that's realistically, that's going to take an hour minimum. Now, things are a little different because this report got released. Okay. And obviously, I mean, to me, it's obvious that the market's reacting to the report and the report was good. I don't need to know what the report says. This is CPI data, I think. I just need to look at the chart. Does that look bullish or bearish to you guys? Look at the blue line. That's the average price. Look what happened every time we touch the blue line. If there's one indicator worth considering putting on your chart, it's the moving average. That blue line's a moving average. Okay. You want to add it to your chart? Just go up to indicators. Moving average, that's exponential. Okay. There it is. And I've got the or you can use this one, bar count and Brooks EMA. That's the one I use, right? Free indicator in TradingView. It's a 20 EMA. Now, if the bulls were so confident, Alex P, welcome back, my brother. Checking in from Tampa. As you guys know, the 3 rules of the chat. Introduce yourself in your city upon entering. Good vibes only, no exceptions. Talk to each other, support each other, encourage each other. It's a community. Okay, so we don't like this, but we're waiting for a close. So now that we hit a new high, it makes sense that there be a little pause. There'd be a little hesitation. Because oftentimes what you'll see is that the market goes to an important price. In this case, we're right near the opening price, okay? And then it pauses, right? It's like a person who needs to take a moment to collect their thoughts. It's really what it's like. So the market will take these pauses, and the decision is going to be if the trend continues in the same direction or not. So that's what we're experiencing right now. What I like is that 8 here closed above 1. That's what I like. What I don't like are the tails above 7, 8, and 9. But I think that the closes are probably more indicative than the tails. So I will consider tightening my stop because reducing our risk will be necessary here. All right, so why are there pauses? Evan, congratulations. Why are there pauses on the chart, right? Like, why doesn't the market just race up? Well, one theory is profit taking, right? When we reach new highs, usually, if the bulls are long, they'll take some off. That's typically why you see pauses when we get to new highs. So that's why it's really good not to freak out. If the market just doesn't start racing towards your target the second you enter. Know what I'm saying? When you enter, your risk is down here because on minimum, your stop loss needs to be below your signal bar. This will be your entry bar, right? This was our signal or our entry. Our signal and entry were in the same bar. Maybe you could call this your signal bar and this your entry bar. Doesn't matter. See 2 big bull bars closing on their highs, closing above almost all the bars to the left. You know, that's a big, strong bull breakout. And then what's data point number 2? Data point number 2 on this chart is the moving average. I'm always pointing that out to you guys. Every time we got down to the moving average, look, it held. So that means moving average is support. And moving average was support all day yesterday after a little bit of down in the morning, right? Here, the bears got some closes below the moving average, but then look, the rest of the day, the bulls were able to keep the price from going more than a few points below the moving average, which is bullish, okay? More bars above the EMA, bullish. More bars below the EMA, bearish. So we're already bullish. We had a gap up open, okay? Let's draw a few lines. 2 minutes left on the candle. Bulls finding some more resistance here. Looking for a decent close. What's a decent close? For us, that's going to be past the midpoint of the candle, right? I want the close somewhere in the upper portion of the candle because that shows conviction on the bulls.
BeatStars.com.
Market being indecisive. But creeping higher, creeping higher. If you look at the bar 9, okay, this candle here, this little doji, there were bears here that thought they'd get a move down, right? There's always two ways to see the chart. One way to see the chart is bull breakout, move up, right? Holding the moving average, CPI report, sounds good. Bulls got this massive breakout. These two big bull bars closing on their highs, almost entirely on their highs. So that's very bullish. But there's always two ways to see the chart. So bears will probably say, no, strong leg down, trading range, down, up, right? And they're going to try and get that reversal down. So there were bears that likely sold short here, expecting 2 consecutive bear bars. So they expected 10 to be another bear bar after 7 was a decent sized bear bar. Okay. And then what happened? 10 was a bull bar. So now those bears are trapped and they're exiting, panicking out of their shorts, sending the market higher. That's what we're hoping for, but that's what I'm seeing. Also, now that we have broken a new high, we're going to reduce our risk. To 6 points there. Another possible feature of this chart is breakout is a spike, okay? So the market breaks out, that's a spike in a direction. And then usually after a spike, you'll get some kind of pullback, that'd be here, and a channel up, okay? Channel pattern is just, gradual creep up. Yesterday was a channel. If you look at yesterday, this is a channel, right? You go up, you come down, almost half as much, up, retrace about half or so, right? You just keep doing that zigzag, and you don't actually go up that much each time, right? So you're not really getting much of a move from here to here, for example, or look, from here to here, right? Couple points maybe. So you keep getting new highs in a channel, but not very big new highs, right? So it's a weak trend. Channel's a weak trend, but it is a trend, which means we get higher highs and higher lows. Looks like we're getting the move, but anything goes. Anything goes until the bar close. Life is beautiful. Clicking buttons and making money, come on. How grateful are we? Suddenly my music's done. What happened here? Okay, there we go. I gotta have my beats, yo. Yeah, we're so blessed and we're so grateful, man. Like, a lot of people would not have the luxury to be able to sit here and play this fun game and try and click buttons and make money. You guys know what I'm saying? Every day, I remind myself how grateful I am. And I really hope you guys are on board with that, because this channel, you know, this channel is something that's important to me. And it's important that we are creating the right energy with this channel. You know what I'm saying? And I feel like what we're doing is a privilege. To be able to learn how to use our mind to get paid. A lot of people don't have that privilege. A lot of people don't have that luxury. So, you guys with me on this? You guys feel what I'm saying? Wow. Oh my God, my chart just completely shit on me. Crazy. Let me reset this shit. Hold on, guys. All right, we're back. What the fuck happened there? Don't ask me. It's kind of scary when that shit just flips off like that. It's crazy. All right, so now we got two legs up. Bears are certainly trapped. Exactly what I said happened. Okay. Bears were hopeful. Bears were hopeful here, thinking we would get a move down, because yeah, you could see a trading range there, right? You could see that we'd get a sell-off instead of a trend up. So bears got short there after 7. 7 was a decent sized bear bar. But then what happens? Bears got trapped, panicked out of those shorts, buying back their shorts, right? If they were short here, they were selling. But then 9 did not get follow through, right? And so when the bears who were selling here saw 10, they bought. Now what happens when people buy? Moves the price up. And then bulls see that and then they buy. Okay, and now that's how you get a move up like that. That's how you get a 12-point move in, 10 minutes. And if you're a bear, are you buying that? I mean, if you're a bear, are you selling that rather? Are you entering short here? I mean, maybe you could argue this is an extreme move up. 20 points above the moving average. Yeah, I guess you could say sell. You could sell that, right? But look at all that momentum to the upside. That'd be, I don't know. I don't see the bear selling here, but anything goes in this game. So we gotta be ready for anything. We're 7 points from our target. I am clutch. You're awesome. Tell your friends, like and subscribe. What helps the first of all, thank you for the question, man. I appreciate you being part of the journey. And it's a journey we're doing together, But what helps is watch time, right? So watching the videos, watching the recordings, watching the streams. In order for the channel to really take off, the channel has to get watch time. Now we just hit 10K subscribers this morning. So I'm very excited and very happy and very grateful about that. But looking in the analytics and the stats for the channel, the real weakness of the channel and the real problem that we got to solve is watch time. So we got to get more people on the streams, and we got to get more people watching the videos for longer. And that's on me. That's on me. I just got to make better shit. I got to make better shit. But yeah, I would say just spread the word, man. Thank you for asking. I really appreciate you. I really appreciate you, and I appreciate you asking that question. And I feel like it's not my journey, this is our journey. So now guys, if I get 20 points on a trade quick, right? Like it looks like we'll hit the target. We'll see, right? But looks like we'll get there. This is what we like. Come on, Bulls. Run, Forrest. Come on. Come on, Bulls. Come on, Bulls. Let's go. Let's do this. Guys, give me some love in the chat. Come on. Give me some encouragement. Let's stay calm and chill. Not freak out here. This is my least favorite part. When the price goes one tick from your target. Oh my God, the agony. This is when you gotta be so zen. Just breathe. Don't even sweat it. Hallelujah, baby. Come on, dollar signs in the chat, y'all. Let's get it, baby. Oh man, that's what we're talking about. Ow. 20 points? 20 points? Come on. Money dance. Gotta do my money dance, baby. 20 points on the open. That's what I'm talking about. Let's go. Life is good. Still running. Oh man, that feels good. That feels good. 20 points on the open. Market like that CPI report. That's what we can say. 20 points. Just like that. 20 points in 35 minutes. Fantastic. Yeah, let's get yes, let's get some dollar signs in the chat. Come on, people. Feels so good. Okay, so you guys want me to do a little breakdown of exactly how to set up a trade like that, or how I set up a trade like that. If you want me to do a quick breakdown on just exactly how I managed that, how I understood what was happening, the pattern, the stop loss, the profit target, put a thumbs up in the chat and I'll do a little breakdown for you. And welcome to Gus And Chris. Got some new people streaming in. Awesome. You guys see how the market is pulling back right as it touches that measure move target? That's because institutions use these measure move targets. It's a really common way of taking profits. When that happens, it's evidence showing you that these measure moves are very powerful. Okay. Man. That's amazing. Rarely do you get 20 points on the open like that. And that's why I did not trade yesterday. And I'm glad I didn't. Because the market was just real slow, right? So that's why a lot of times if there's a report coming, it's better to just wait. You know? And just kind of go after. Like wait for that report and then trade after. Trade the aftermath of the report instead of, you know, sitting around all day. Like just to give you some perspective, okay? This is yesterday. So let's say we took a similar setup yesterday. Let's say we bought here, okay? In order for us to make 20 points, okay? So that would be 20 points. That'd be 20 points. Okay, let's get some perspective here because this will tell you something about trading. If on the open yesterday, we entered long, similar time as today. Today we entered at 6:55. Let's say yesterday we entered on this buy signal at 7:15. So around the same time, okay? In order to make 20 points, we would have needed to wait 4.5 hours. 4.5 hours. 4.5 hours. Okay, we just grabbed 20 points in 30 minutes. Is that 30-minute hold? 35 minutes. Okay. So that just gives you a really clear idea of how varied this game can be, right? That's the kind of patience you need to be willing to have if you want to trade every day, which is what I've done for a long time. Probably the last 4 years or so. Okay. But what I'm doing now, and that's why I didn't stream yesterday, right? Because I'm like, you know what? There's a report, CPI is Tuesday. Let's just skip Monday. You know, probably be a slow day anyways, and it was. You want to wait 4.5 hours for 20 points? Or just skip the whole thing, take the day off, come back the next day, bull breakout on the open, know exactly what to do, get in, set your stop loss in the right place, use that measure move profit target, 20 points like that. It's beautiful, beautiful. It's a beautiful morning. All right, so let's do a trade breakdown. Okay. Now, we're still running. But let's do a little breakdown. So I want to share something with you guys. These are my setups. And this document I'm actually giving away. So if you want me to send you a copy of this document, just put a thumbs up in the chat. Okay. And I'll share this with you. These are my setups. Okay. So let's match which one of these we chose to this, okay? So there's 3 setups. Breakout, FU candle. Okay, so for me that's a pullback. I call it an FU candle. Okay. Or a failed breakout and reversal in a trading range. So we're going to eliminate number 3. So that means this was either a breakout or a pullback. Now I'm going to ask you in the chat, okay? If I entered here, pop quiz, okay? And test your guys' knowledge. If I entered long here, okay? That's my entry bar. All right? Am I entering on a pullback or a breakout? Pop quiz. Tell me if this is a pullback or an entry. Sorry. Tell me if this is a pullback or a breakout. If entering here is entering on a pullback or a breakout. Which one? Tell me in the chat. I am clutch says says pullback. Let's get some more guesses. What do the rest of you guys think? Pullback is the best entry. Yeah. Well, there's no best, right? Because in trading, there's always trade-offs. Every trade is a trade-off. So it's not like pullbacks are the best. They're one of the best. But people like pullbacks because Alex P says pullback. Okay, so we got 2 for a pullback. What do the rest of you guys think? Was this a pullback where the purple arrow is? This is where I entered. Okay. Was that a pullback entry or a breakout? So we're gonna take a few more votes and then we'll talk about it. So a pullback is a great entry because why? Low risk. People like pullbacks because low risk. Okay. But when you give up risk, or in other words, low risk is an advantage, right? Because obviously we want to minimize risk. But if you get low risk, which is a benefit, you have to give something up. Every trade setup is a trade-off. There's trade-offs every time. So what you give up is you give up distance. You give up profit, right? Because on a pullback, you wait for the market to break out and move in a direction and then pull back. And you're entering as the market's continuing in that direction. But if you enter with a pullback, what you miss out on is that initial distance of the move, okay? And that initial distance of the move could be pretty big. So you're giving that up. So you're taking less profit so that you can have less risk. Okay, so that's the trade-off. Which is a decent trade-off. I mean, it's a great trade-off, honestly. Pullbacks are excellent, right? But the key is just to know like the pros and cons of each. Right. And sometimes you don't get the pullback, right? Sometimes the market just races in a direction and you really don't get much of a pullback at all. So, or sometimes it doesn't pull back, it actually reverses, right? That'd be a failed breakout. Or a climactic move. Sometimes you'll get like a climax, a buy climax, and then that's it. That happened the other day. That happened here. Okay. Let me take these drawings off. That happened here, right? So let's say you saw this, right? And you were waiting for a pullback. Well, guess what? You didn't get the pullback. You got this massive move down, okay? So sometimes waiting for the pullback is not what you want to do. But that's why in trading it's always trade-offs. Okay, so here's the breakdown. Okay, the correct answer, guys, is breakout. The correct answer is not pullback. Now, you can argue that this is a pullback in this bull trend. So on a higher time frame, you could argue that this is a pullback. But technically, since the open of the day is here, okay, and the market the market sold off aggressively down to the moving average. This is actually a breakout, breaking out above all of these bars to the left. So this would be, okay, this would be a breakout. Okay, this would be a breakout. Okay, so I entered on a breakout, right? So that's a breakout. Where's the pullback? Pullback was here. Pullback was here. Okay. There's the pullback. That's the pullback. Okay. So breakout, pullback, right? breakout, pullback, right? And then what happens if the pullback, what happens after the pullback? Well, what happens after the pullback is you get go orange. After the pullback, you get trend resumption, or I'll just say trend continuation. Okay. That's what you get. And that's what pullback means, right? Otherwise, it'd be a reversal. Now, pullback is technically a reversal, but I don't want to confuse you guys. I don't want to confuse you guys. There's a lot of confusing things in trading, right? Like breakouts are actually reversals, right? And pullbacks are actually reversals. Okay, so it can get a little confusing, but this is how a successful breakout works. Okay, the most important thing to understand in all of trading, breakout. You got to know the mechanics of a breakout. Okay, so breakout is a spike in a direction. You get a big move in a direction. Usually it's a big move, okay? Now, what I look for, and you can see that on my document, okay, is 2 consecutive bull bars with one closing on or near its high, okay? So notice, this is that, right? Like, look, 2 big bars, both closing near their highs. How do I know they're closing on their highs? Because there's no tail, okay? And then here's one of the biggest things I look for. And this is why I was confident holding and entering and risking 15 points on that trade, guys. Initially, I risked 15 points on the trade. That's a lot to risk. Why would I do that? This is why I did that, okay? This is why I did that. Because this candle here, I gotta change the color in this. Hold on. Let's use blue. Okay. This candle here, notice how much bigger this candle is to this candle, okay? That is a very strong sign of momentum, and you don't see that very often. If you go back and check, and look for pairs of bull bars, like let's just look for it yesterday, okay? Is there anywhere where we see that the second candle was so much bigger than the first one? Maybe here, okay? But let's actually quantify. So, that's a 15-point candle, okay? And then right before it, we had an 8-point candle. Okay, so the second candle's twice as big, about twice as big as the first one. This guy's 6 points. This guy's 7 points, right? Usually you'll see it like that. Okay, 1 6 points, 1 7 points, 1 6 points, one's 9 points. Rarely do you see a second candle, meaning the one after, okay? A lot of times you'll see the opposite. So big candle and then a smaller candle. That's a loss of momentum, right? So yeah, even here, right? You don't see this kind of explosion up with both candles being big and the second one being much bigger than the first one, okay? In this case, twice as big. So that is a very strong breakout. So when I'm entering a breakout, one of the things I'm looking at is what is the size of the second bar relative to the first one? And this is one of the most important things to be able to learn how to identify. And it's one of the most important things I'm always practicing, right? Is what is the strength of the breakout? It's not enough to know that the market's breaking out. You got to know the strength of the breakout because that'll give you clues to what is going to happen next and what you can expect next, okay? So if the second candle is closing on its high, the first candle is closing on its high, and if the second candle is way bigger than the first candle or just even significantly bigger, that's strong. That's a sign of increasing momentum. That means momentum is picking up, right? And we want to enter as the momentum's picking up. We don't want to enter as the momentum's slowing down in a breakout, right? Because a breakout is it's like it's like a race and someone shoots the gun and everyone starts running. You're getting in like early, okay? So that's a breakout. So that's my first setup, and this is how I executed that trade. 2 consecutive bull bars, one closing on or near its high. This is entry on a breakout. Are those 2 consecutive bull bars, one closing on or near its high? Yes. I'm giving you some nuance. I'm giving you some detail to help you see how I look at the strength of a breakout and whether or not I should enter on this breakout. And if I do, how likely this trend is to continue and how far we're likely to go. Okay. So that's our setup. Okay. Our setup's a pattern that we look for. Thing number one. Thing number two, put a stop loss 2 ticks below the first leg of the first breakout bar. Where's the first breakout bar? That'd be here. Okay. Now in this case, I consider this the breakout for me, because if I were to risk all the way down here, that's 24 points. I don't think the market's going to suddenly, if the market reversed down here and then reverse back up 20 more points, I don't think that we're going to reverse back down 20 more points. Now we could, okay? But considering that this happened, I think, and considering there's a report, and considering I'm assuming that the report got released right around 7, right around here, and that's what happened here, then I'm saying, okay, no, the market's taking a direction, okay? And also, notice the gap up, okay? See how the opening candle is higher than the closing candle of the prior day? That's actually a bull breakout. If we switch to the electronic trading hours, right now we're looking at the regular trading hours. Switch to the electronic trading hours, you'll see all of this action overnight. This happened just before the open. So there was this huge move up. So that means the bears tried to get that sell down, and the bulls were like, fuck you, bears, okay? And we got this big breakout. So if you look at the chart with the electronic trading hours on, you actually see this is actually a higher low double bottom. This is double bottom. Why? Because that's a bottom, right? The market went down and then it rejected up. And then it did it again. It does it twice. The second one's higher than the first one. We call that a higher low double bottom. And I'm always pointing these out to you guys. Notice I pointed one of these out yesterday, right? I don't know where it is, but they happen all the time. Okay, here's another one, right? Higher low double bottom, here. Okay, a bull trend is filled with these. In fact, every time you get a higher low, that's exactly what that is. So anyways, that's that. Okay, so instead of putting my stop loss down here, which to me seemed too far, I consider the breakout bar here, so I put my stop loss here. Okay, so that's step one. Okay, that's step one. Stop loss, put the stop loss 2 ticks below the first leg of the breakout bar. So we're considering this the breakout, put our stop loss here, enter here. Now, as soon as we entered, if you guys were on the call at that point, on the live stream, we pull back. And now I'm like, oh shit. It is not a good feeling to enter and suddenly see yourself losing money. No one likes that. But what I'm looking for here is I'm looking for follow through. So one bear bar is not a problem because I know that we're near the top. We're right by the high of the day. Okay, we sold off right here. So it makes sense that if you were long that you might take some profits here. And it's typical to take profits at support and resistance areas. This is a resistance area because it's near a prior high. Support and resistance, prior highs and lows. And there's usually profit taking in support and resistance areas. So I'm not worried about this. Leave my stop there. Now, candle 8, we get trend resumption. Okay, but there's that big tail on the top, which I point out to you guys, which I don't like. However, 8 closed above 1, the body of 1. So to me, that shows confidence on the bulls, and it's a very clear and obvious sign. Look, it's slightly above the bar body of candle 1. Candle 1's right here. Okay, so this gives me confidence to continue holding. And then when this happened, I'm like, okay, that's concerning because if the bears get 2 consecutive bars down, then, you know, this might actually be a trading range instead of a trend up. And we called that out. And I said, you know what? If the bears get disappointed here, if the bears that sold here fail to get follow through here, they're going to panic out and that's going to send the price up. And that's exactly what happened. Okay, so that was awesome. And how do we take our profits? Profit target. Look, use measured move, equal distance. Okay, I've got my measure move tool here. In case you haven't seen this before, this is my measure move tool. You go to the settings, you turn off everything except 0.51. Okay, turn off everything else. And that gives you this tool where you get 2 equidistant moves, right? That means the size of this is equal to the size of this, no matter how you draw it. Okay, so let's look at my setups, okay? And this says use a measured move, equal distance, of the breakout, measured from the open of the first bar to the close of the second. Okay, so let's figure that out. Opens here, closes here, target here. Notice I put my target there, and then I didn't touch a fucking thing. Okay, and the don't touch a fucking thing, that's the hardest part of trading. Okay, that's the hardest part of trading. You see this, you don't panic. You see this, you don't freak out. You see this, you don't exit early. You see this, you just sit there and breathe. And if you watched, the market went right up to that profit target and flirted with it, flirted with it, flirted with it, flirted with it. I don't know how long we were standing there, 1 to 2 ticks from that profit target, but holy shit, man. You just got to be so cool, calm, and patient and just follow your rules and procedures. And it's not the time to start making changes and adjustments once you've ironed out your protocols here. So that's how I did that. That's how you make, in my opinion, that's how you do a breakout trade. You know, that would be like my system, my strategy, my rules and procedures for trading a breakout. Perfectly executed. Perfectly executed. The only thing I don't like about my performance on that is, if you notice, and if you go back on the recording, you can see I hesitated a little bit. I did hesitate a little bit here, right? I hesitated for just a second because I go, oh, that's a huge candle, right? And I knew that I would be risking a lot, okay? Yeah, that's a 15-point candle, right? So area for improvement would just to execute a little quicker on that. But other than that, that was, you know, I would say I give myself an A-. Give myself an A- for execution. And so you guys are aware, the only thing I really care about is execution, because you're only successful the moment you perform a successful act. Not before, not after. And in trading, a successful act doesn't always result in a make money trade, right? Because you do not control what the market does. I do not control what the market does. Therefore, the way to win in trading is consistent execution with a profitable strategy. I know my strategy is profitable. The only question is how consistently I can execute it. So the only thing I care about is, did I execute according to these rules and procedures? Okay, and there's 3. Did I do each of those 3 things correctly? Or did I did I call an audible and suddenly decide, oh, this time I'm going to do it differently. This time I'm going to do it that way or this way. No, I did it exactly like I told you, right? Exactly like I told you. And you can see, you know, you can see the executions, right? Bought here, sold here. See, blue means buy, red means sell. Okay, correctly executed. So good for me. Yay, Brandy. Yay, Brandy. Brandy did it right. And notice I said you're only a success. I'm only a success the moment I perform a successful act. So I was successful, but now I'm not. Okay, so it's like, okay, great, now do it again. And that's the game in trading. And if you don't like that, do something else. Right? That's one of the that's one of the things that is kind of frustrating about trading. It's like, you close a trade, okay, good. Let's see you do it again. Right? It's very moment to moment. And you could just easily fuck something up on the next candle, on the next trade. So you got to know that this is a marathon of consistency. This is a marathon of consistency, walked out 1 trade at a time. This is a marathon of consistency, walked out 1 trade at a time. That's how you win. Okay, so Val's saying, please post my strategy. And we got a question about avoiding false breakouts. Great question. Here's my strategy. Okay, I'm giving this document away. So just give me a day Give me to the end of the day and I'll have this ready to share. But there's my system. Okay, there's my strategy. Worked very hard on that. And this was very much Al Brooks style trading. So if you want to know where this comes from, Al Brooks, godfather of price action. Now he teaches so much more than this, but these are things that I developed from studying from him. 35 years in the game. So there's no one I trust more. And it's just 3 setups. And this is what you got to do if you want to trade well. You got to clearly define the pattern, the stop loss, the profit target, and then just practice executing consistently, time in and time out. Okay. And like I said, I will have that for you guys shortly. I'm just working on getting it up on this website. Getting a website up. How about that? Trades by Brent officially has a website. Tradesbybrent.com. Okay, so let's get back to the question. So we had a question about false breakouts. Okay, so great question. I'm going to take a bathroom break and I'll be back and I will answer your question, my man. Quick bathroom break. Be right back. I'm back. Hey, here we are. Okay, little bathroom break, a little tea. Get a little sore throat sometimes. All that yapping. Okay, so the question is, how can you avoid false breakouts? Well, I don't avoid them. I trade them. Okay, so that's my answer. Why avoid them when you could trade them?
Something that we take on day by day. Every day that I don't pick up that drink, I beat the devil.
This is a channel. A measure move. A breakout. I am clutch. Does that answer your question, or do you have a follow-up question? Feel free to ask a follow-up question if you have one. Reasonable short. I wouldn't take it though. Will we pull back to the moving average? Most likely. But this is a very strong trend, so I do not fade strong trends, and I do not recommend fading strong trends. Let's see if we shorted this, how that would go, right? We'd put our stop here. We put our profit target there. Like I said, I don't like it because you're in a strong trend, right? If we go to a higher time frame, like let's say 15 minute, look at all that buying. So buying strong, fading strong trends, not wise. But you know, after consecutive bear bars here with the second one closing on its low, selling pressure increasing, okay? The second bar of about equal or slightly greater size to the first, probably get a little more of a move down. But this is a channel, right? This is a channel, and it's a tight channel. Why is it a tight channel? Because look, you've got one pullback here, one pullback here, tiny. This is the first major pullback in this channel, right? The closest thing we had was this, okay? And that's right after, I mean, that's where the bears got trapped, and that led to the move up. So what happens when you get a decent pullback in a tight channel? The first sort of, let's call this a major pullback. I mean, it's a minor pullback, but it's a minor pullback because it's the biggest pullback of, right? It's bigger of all these, okay? Right, of all those bear bars. This is the first time they got two consecutive, and this is bigger than all those, okay? So it's the, you know, it's the first major pullback in that sense. But what happens in a tight channel when there's a first real pullback? This is not really a pullback. I mean, it's more of a pause. It's just a little doji. This is an actual pullback because the price actually moved down, okay? Didn't just pause. What happens in a tight channel when there's a first like decent pullback like that? Well, if you have a strong channel like this, right? A tight channel means people are buying. A tight channel means traders think the market is hot and that it's going up. Why is the only reason why people buy? They think the price is going up. Okay? The only reason why anyone buys any financial instrument is because they think the price is going up. Okay? With the exception of taking profits. But they enter because they think the price is going up. So if bulls bought here, okay, and bulls are so confident they're still buying, 15, 16, 17 points above the average price. The second the bears get a decent move down, what are the bulls gonna do? Okay, first of all, is this enough to break the confidence of the bulls if they've gained all this territory? No, that's not significant. They caused a little bit of damage. This is like nothing. This is like some damage, but everything has to be taken into consideration. So this, relative to all this, tiny, relatively tiny. So what are the bulls going to do the second there's a decent sized pullback? They're going to buy because they're still bullish, and that's essentially a deal. This is how pullbacks work, right? The market is decidedly bullish, which means the market thinks the price is going higher. So what happens if the price goes down? Buyers are like, hey, sale. Hey, discount. Hey, it's Ross dressed for less. Put on the chart if you get what I'm saying. It's Marshalls for market makers. It's buy one. It's pay less. It's pay less. Pullbacks are like pay less for traders. That's decent. That's decent. Okay. Pullbacks are like pay less for traders. Okay. Okay. All right. Ari, welcome to the chat. Chiming in from Orlando. Shout out to Orlando. Guys, 3 rules of the chat if you're new. Number 1, introduce yourself and your city upon entering. Number 2, good vibes only. Number 3, support each other, talk to each other, encourage each other. This is a community. Okay? Don't just talk to me, talk to each other. So, shout out to my man Sithios. Johan, what's up, my brother? Dude, you missed a great trade, man. We pulled 20 points out of the market in 35 minutes this morning. You can see my executions on the chart. This is where I bought, this is where I sold. Classic breakout setup for me. Stop loss down here. Market moves, tighten my stop, exited the measure move. 20 points, 35 minutes. Booyakasha. And now we're in a channel talking about pullbacks, right? So that's that. Shout out to my man Bruno from Pomona, California. Pomona, California, man, that's actually pretty close to me. I'm here in San Diego, man, so we're practically neighbors. What's up, Bruno? Thank you for joining us. Thank you for being here. Welcome to everybody coming on. Cynthios, it's all good. You can go back and check the recording. But yeah, that was a beautiful trade, and it could have gone the other way. So we got lucky this time. LOL says he's working. I guess you're Bruno, right? Bruno says he's working on a 300K account with Elite Trader. That's Elite Trader funding, ETF? Yeah, I've used them. I got funded with them at one point. Dude, focus on consistency. That's my advice. Not that you asked. There's a little unsolicited advice for you. Focus on consistency, not your P&L. Since you didn't ask. Nice. Sweden in the house. Mike V. Shout out to Mike V. Sweden in the house. I love the international folks. I've been to Sweden, man. Beautiful country. You guys love your saunas. Where did I go in where did I go in Sweden? I think it's called the ice bar or something like that. It was this bar and it was all cold inside and it was filled with ice. Pretty cool. Yeah, so the trailing threshold with ETF. Yeah, so what I did with ETF, and this is how I got funded with them, is I saw that they had a fixed threshold. So I went for the account with the fixed loss limit. Fixed loss limit. It's not a fixed threshold, it's a fixed loss limit. So that was cool. And I got funded really quickly with them. Because I just went for, 4 or 5 points on the ES. Closed a bunch of quick trades like that. 4 points, 5 points, 4 points, 5 points. Built up a buffer. And I got funded in like, I don't know, pretty quick. So something about the fixed loss limit helped me out psychologically. It helped my performance psychologically, and I was able to do really good with that. But it's not easy. You have to be confident. And the market was moving a lot back then. This was like 2 years ago. That's when the market was like really moving a lot. So it was it was easy to get 4 points. Right? Like the moves were like really big. So, but yeah, I'm not sure how I feel about Elite Trader funding. To be honest, I trust Top Step more. So that's who I've been trading with lately. Yeah, scalping for 5 points on the ES is scalping for 5 points on the ES is well, I just go for the ATR. I think you guys know that. So if we go back to my strategy, right? You can see here my profit target in trading ranges. This is for me. These are scalps. This is when I'm scalping, would be in a trading range. I go to the ATR and I round down. Okay. So let me show you guys what that would look like on this kind of chart. And this goes back to I am Clutch's question, right? Which is how to avoid false breakouts. Now my answer to him was don't avoid them, trade them. I mean, that's what I do. Okay. Like, why not just trade them? Why would you avoid them? So this is actually a really good example of a false breakout. A false breakout is a failed breakout. I call it a failed breakout. That's how I refer to it. Because that tells me, that's more informative. And that tells me what's actually happening. It's not that it's false. Everything you see on the chart is, well, everything you see on the chart. Okay, there's nothing false about it. So I call it a failed breakout because that tells me that helps me understand what that thing I'm seeing is actually trying to say. Okay, so this is a trading range. Why is it a trading range? Because we were down here and we went up and then we came right back down to about that same point. So the market's in this range. You see that? And then look, we're touching the top of the range again. Okay, so there's a trading range. So where's the breakout? Here. Okay, so look, you've got your range and you've got the bears trying to break out of that range. So here's your breakout. And what happened? Did the bears succeed and get a move down and break out of this range? The yellow box? No, they failed. So this is a failed breakout. Okay. So why would I say I don't try and avoid the failed breakouts? I trade them. Well, because look, if you've been going up, okay, like this, and you have this super strong breakout, and that this has been a tight channel, and the best that the bears could do were a couple dojis and then 2 bear bars closing below. I mean, this second bear bar closed below. The best they could do was close below 3 bars, right? This bar closed below this bar, and this bar. Did it close below this bar? No. Okay. So the best the bears could do was push the price down. I mean, barely, right? If you count how many bars it closed below, that shows you how strong it is. And look, it only closed below 3 bars to the left. So that's a very weak pullback. So the bears are weak. So if we get a trading range and the bears get a weak breakout, okay, do we expect it to fail? Yes. So instead of avoiding the failed breakout, you trade the failed breakout. And how do you trade a failed breakout? The way I trade a failed breakout is I go for a reversal. So if the data shows that this breakout is likely to reverse, which it is, the data shows that this is a tight channel. And in tight channel, the first reversal will probably fail. Why? Because momentum. I mean, why would the bears suddenly have conviction and push the price down here if the bulls have been owning their asses all morning? The bulls are in complete control of the price, okay? I shouldn't circle that. Here, the bears were causing damage, okay? But ever since bar 5, okay, the bulls are in complete control of the price. Complete control of the price. So if the bulls are in complete control of the price for an hour, okay? For an hour straight, why would the bears suddenly just completely take over? That's not how markets work. That's not what you see. It's not just randomness. There has to be some logic to it. So it makes sense that this breakout would fail. Okay, and I should be more precise in my drawing here. This breakout. Okay, it makes sense that that breakout would fail. So how would I trade that? I would bet on a failed breakout. In this case, this breakout is a pullback in this bull channel, and it's an attempt on the bears to break out to the downside. I would bet on that failing. Why? Because the context is showing me that the bulls are in control of the price. And a rule of thumb is in a tight channel, which this is. A tight channel is a strong channel. Another way of saying that is in a strong trend. In a strong trend, the first pullback will usually continue. It'll usually just pull back and then continue. Okay, that's what a strong means, right? The strength of a trend means, it means it has inertia. Inertia means an object in motion will continue to stay in motion. Markets have inertia. Momentum is inertia in the markets. So what does that mean? That means it's going to resist change. Inertia means resist change. So the bears are going to try and change what's been happening here for the last hour. But because there's so much momentum to the upside, there is a resistance in the market to that change happening. And that's why you got trend continuation here. Okay, so look, after 18 and 19, 20, 21, 22, completely erasing the progress that the bears made there. Okay, so that's how I think about failed breakouts. Any questions? We can do some more examples of failed breakouts if you want, but let me know if there's any questions. Val is asking, do you always trade on the 5 minute? Yes, with rare exceptions. Yes, with rare exceptions. Also, Val, where are you from? In case you're just joining us, this is Trades by Bren. Thank you for checking out the live stream. I appreciate you. 3 rules of the chat, in case you haven't been here before. Number 1, introduce yourself in your city upon entering. Number 2, good vibes only, no exceptions. Number 3, don't just talk to me, talk to each other. We're building a community here. Support each other, encourage each other. It's not all about me, it's about you guys. So how do we create a community? Interact, engage, support, encourage. I can't be the only one. Val, shout out to Yukipa. Is that Southern California? Where is that? Yukipa. Norman says, staying on the couch. I don't know what you mean, but you're welcome. Norman, it looks like you're just joining us. So if you are, and you can go back and check out this trade that I did live, where I entered here on this pullback, and we grabbed 20 points in 35 minutes, which is awesome. Not usual. You don't usually get a 20-point move in 35 minutes. Right? Like I was pointing this out yesterday. If you wanted a 20-point move yesterday on the open, you would have had to wait 4.5 hours. Okay, not 35 minutes. So it was very exciting. I wish you guys were on earlier, but you can go back to the recording and watch the earlier part of the stream and just watch that beautiful breakout trade. If you want to see how I do the breakout trade, you can see the executions on the chart. That's where we bought. Okay, so we bought 2 here. We bought 2 lots here. Yeah, you can see it. Yeah, buy 2. Yeah, and then we sold 2 here. Okay, so that is how I do breakouts. Okay, I enter on a strong breakout. Oh, you meant coach. yeah. I'm like couch. Appreciate you, coach, staying on to coach us every minute of the way. Yeah. No problem, man. No problem. I want you guys to get better. I want myself to get better. I want us all to get better, right? The whole point of trading for me is about growth. I want to grow my account, which means more money. I want to grow my discipline, and I want to grow myself, which means better habits, more conviction, more confidence, more patience, right? More doing what I said I was going to do instead of being impulsive, and also more contribution, right? The more I contribute to others, the better my life gets. The better I feel about myself, the more I love my life. So I believe I was meant to be of contribution to other people. So this is not just about making money for me. This is about actually making a difference for other people. So I'm happy to hear that you guys are are getting value out of being here, and you have my commitment that every time I am on this live stream, that I will do my absolute best to make this a valuable place for you, okay? Because this is not the Bren show, right? That's what I want to make clear. Go to the other trading channels if you want to see, like, oh, me, look how cool I am, right? You know, with my sunglasses and talking about all this money I'm making, all this money. Oh my God, look at how cool I am with all my trading and how, right? It's like, okay, there's nothing wrong with that. I mean, do you? I love to see somebody flex and stunt if it's real, okay? If it's real. But this channel, I don't give a fuck about doing that myself. I don't care about all the flashy things. And to me, those are all just distractions. For me, this is, how can I grow? How can I be stronger, better every day? You know what I'm saying? So if you're here, that's what we're going to talk about. We're going to talk about trading. We're going to talk about how to do it well. We're going to talk about the challenges. I'm not here to sell you on trading, because this shit is hard as fuck. This shit is hard as fuck. And if there was one thing I wish I could go back and do differently, I wish someone took me aside and told me how fucking hard this is. It would have made my life a lot easier. The more you embrace that this is difficult, the easier you're going, the easier that it's going to be. Now, I said easier. It's still hard. But if you assume it's hard, you won't be blindsided and shocked by how incredibly difficult this is over time. So, why then would I want to make this channel a place of support and community? Why? Because of how hard it is. Because you guys need the support. You need the support. I need the support, right? This game, this trading game will test you in every conceivable way. And what are you going to do? What are you going to do when you're getting tested? What are you going to do on those sleepless nights? Lord, I've had those. You need support. Otherwise, you give up. Nothing wrong with that. But that's not what I'm about. I'm about persistence. I'm about getting it done. I'm about crossing that finish line. This trading game is a marathon, walked out one trade at a time. That means you got to keep going if you want to win. And if you want to do yourself a favor, start by completely eliminating all thoughts of this being easy ever. And strangely enough, if you do that, it somehow gets a little easier. Because you just go, okay, shit is hard as fuck. And it just makes it easier somehow. Don't ask me how that works, but that's how it works. Okay, so another example of how to trade failed breakouts, okay? We've got a trading range here. How do you trade a trading range? You sell at the top portion or you buy in the lower portion. Now, if I'm trading this trading range, probably not wanting to sell because I don't like fading strong trends. It's not a good idea. So I'd more so be looking to buy down here as opposed to selling up here. But this would be one of my setups. If I'm trading this like a trading range, I would sell here one tick above this candle, right? So that candle here, I'd sell one tick above it. So I'd sell right there. Okay. I'd sell my stop loss up there. I go for the ATR. ATR is 5. So I'd go for 5.5. So I'd go for 5. So there would be my short scalp if I was going to scalp, right? There's the scalp right there. Sell up here, you go for ATR profit target, meaning you're selling right at the top of that trading range, and you're buying back your short right in the middle. But like I said, I'm not going to do that because this is a very strong trend. So there you go. Okay, question from Ari. Do you think big hedge fund traders try to bump retail traders out of the trades by moving the market against us? No, I don't think so. I don't think they give a fuck about retail traders. That's like a whale. That's like a whale concerning itself with like a little tiny barnacle. Okay, retail trader, you're like a barnacle on the back of a whale that is the size of an entire country. Just to put things into perspective, okay? Just visualize a whale physically the size of the state of California. Now imagine a barnacle on its back. That's you as a retail trader. Why the fuck would that whale have any thought about that little barnacle or what it's doing? You get what I'm saying? You know what I mean? Val, thank you for being here. Val, we appreciate you. So bulls failing to get any kind of momentum to the downside. But really, we're just in this trading range. And here is another rule of thumb. This is called a trend from the open. Why? Because we started trending within the first 30 minutes or so, okay? Market started moving up right around 650. So yes, we went sideways a little bit in here, but this is technically, well, it's what I would consider a trend from the open, Albrook's methodology. What happens after we move up like that? The market's going to have to go sideways at some point. So if you get a strong move on the open like this right away, you can expect the market to go sideways for about 15 bars. So that means if we count right there from the high, that we can probably expect the market to go sideways until here. Okay, so that means this trading range would probably go here. Now maybe the trading range started here. Okay, so maybe we go here or here, something like that. So we'll see. I like to count it from the high though. So let's put it there, and then if it happens sooner, we'll adjust. Again, breakout trade. Big bull bar closing on its high. After another big bull bar closing on its high. Second bull bar, twice the size of the first bull bar. Both zero tail, closing almost completely on its high. After a lot of sideways. Okay? After the market's been going sideways. This is marked off here. If we look at the electronic trading hours, you can see we already made a higher low double bottom. Okay? So a bottom was found. Now we've got to move up. That's a breakout. We got long here. We put our stop down here. We set our profit target from the open of the first bull bar to the close of the second bull bar, which puts our profit target here. As soon as the market moves our way, we tighten our stop here to about break even, and we just hold for that measure move profit target, 20 points in the bank, just like that. And when you take 20 points out of the market, you can just chill. You really don't have to worry about anything, right? It's like, okay, job well done, 20 points, good. All right, Cynthios is saying their profits are probably not comparable to those of the retail traders. Yeah, so that's what we're saying, not even close. So to think that as retail traders, that we have any influence on the market is an illusion. It's completely false to think that we have any influence or say over something like the index. This is the S&P 500. No. Just look at the size, the volume, right? If there's 71,000 contracts being traded, how many contracts are you trading? How many contracts would you have to trade if there's 71,000 contracts? 71,000, okay, contracts being traded. How many would you have to trade to have any influence at all, mathematically speaking? Hundreds, thousands? People say they like my charts because they're clean. I think they are. I mean, look at that. That's a clean ass chart, right? That's why I don't like a lot of these other systems. They're too complex. Okay, so bull's getting another higher low. So we're still in this bull channel, right? Which means bulls will buy at the new, bulls will buy when we make a higher low. Made a higher low, bulls will buy. Made a higher low, bulls bought. But technically we're still in this trading range, so not interesting to me. A minute 30 left on the candle. See if the bulls can get a close here. that's decent, or if it's just gonna continue to range. One of the ways that you can assess if we're back to trending or if we're ranging is look at the bar bodies. Look at the bar bodies. See how the bar bodies are overlapping? Do you see how the bar bodies are stacking? They're stacking like blocks. You could take the bar bodies and stack them on top of each other. Okay? But then now, the bar bodies here, they're starting to overlap. Okay? So, that's a sign. That's a sign that we're in a trading range. And then you see the tails. Always lots of tails. Tails above and below bars. So this is clearly a trading range. But it's a trading range within the context of a strong bull trend, which means most likely this is a bull flag. What's a bull flag? It's a pause in a trend. A bull flag is basically a pullback. I think of it like a flag. Flag's like, slow down. Slow down. You know, like car racing, like the wave the flag, slow down. It's the rhythm of the markets. You get a move and then you get a pause and then you get another move. So the flag is the pause. Pullbacks are like pay less for traders. That's good. Okay, now look at 26. Doji, tail on top, tail on the bottom, tiny bar body. Completely overlapping with 25. Bulls losing their conviction. We will have to touch the moving average. We absolutely will have to touch the moving average. Shout out to Brandon. Welcome. Okay, so question for Brandon. Brandon, what city you from? If you're new, let me share the rules with you. Here are the rules in my chat room. Number 1, introduce yourself and your city upon entering. Number 2, good vibes only, no exceptions. Number 3, encourage each other, support each other. This is a community. Don't just talk to me, talk to each other. It's a community. All right, so those are the 3 things. So just making sure you know the rules because you're new here. All right, so Brandon, shout out to Washington State. Question, realistically, how long would you say it's taken for you to get to the point where you're at with trading? How long would I say? I would say it's probably been like 4 years, maybe 5, 4.5. Yeah, but I really worked my ass off. So Texas coming in strong, Florida coming in strong, California coming in strong. Shout out to you, man. Thanks for being here. Brandon, thank you. Yeah, we're creating a place of pure positive energy here. We're creating a place of pure positive energy here. So if you're with that, get with the stream. Hit, subscribe. Come back. We're really going to create an incredible community. We're going to create an incredible community of pure positive energy, man. Imagine that. That's the vision. So I want you guys to catch that vision. Because, I want to create a place where it makes it easy to keep going even when it's hard. You know what I mean? Also good beats. Very much a part of my very much a part of my vision. Great beats. Has to be. Okay, so there'd be a great scalp right there. Right? Now I didn't like that because we're too close to the moving average. But there would be a great scalp right there. So again, 1 tick above the prior high or 1 tick below the prior low. Right? So there's my scalp right there. 1 tick below, Look at the ATR, bottom left-hand corner of your screen, 5. So then we go one tick below, adjust that profit target to 5. Okay, right there.
Oh my God, it's the sound engine.
Stop loss is going to be here. Decent trade. Right, and you just hold for that profit target. So Bruno's asking how many contracts? Depends. 1, 2, 3, something like that. It depends. Bear's getting some momentum. Pullbacks are like paylights for traders. Support at the moving average. You guys see the blue line? Blue line on my chart is a 21 period moving average. See this? Show the 20 period EMA. See the 20 period EMA for the current time frame. Okay. So throw exponential moving average on your chart, make it a 20 period moving average. That's this blue line. What do you notice about the blue line? Well, I don't know what you see, but I see support. See? See all this space? That gap means that the bulls own this chart. And then look at what happened last time we touched the EMA. Boom! 20-point move up. This is more than a 20-point move up. Probably more like 30. Maybe 40. Let's see. How big was the move from the EMA? 50 points up from the EMA. Right, keep in mind that this candle alone was 20 points. Not 15. Crazy. Imagine if we got in here. Bear's coming down to test the moving average again. Let's put this here. Now, what do we expect here? We expect the bulls to buy. So theoretically, this is a scalp. Minute 54. Looking for a bounce of the EMA. I don't have faith in the bears with this much support at the EMA. "13 seconds left. Makes sense the bulls will buy here after that bounce. We could also come back and test that again. So let's see. Two legs down. $28 double bottom with 20. It looks like we missed the move, but I'm going to leave that order on just in case. Very important moment here. Why? Because of gap. Because gap. Right? From here to here is now a gap. Which I think they call that displacement. Makes sense to call that displacement. If they don't call it displacement, I call it displacement. Okay, so the price spends an hour plus above the EMA. The second we touch the EMA, the bulls buy. That is typical. That is textbook.
Brand new caddy.
Brandon's asking how often do I go live? Most days. Most days. Most days at 7 a.m. Pacific. Not every day, but most days. If we get more people showing up, I'll do it more often. Real strong buying. Notice how long this candle's been moving up. Growing, 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 growing. As soon as the bears failed at the moving average, right? And then you had two legs down here, here. You had micro double bottom here. That's a micro double bottom because there's two bottoms there, right? What does the bottom mean? It just means we went down and the price got pushed up. It's like, oh, that's like a floor, right? Hit the floor. And then came down again. Hit the floor again. Okay, we call that finding support. Just look down at the floor. See that? That's support. Same concept. That's called a micro double bottom for that reason. We've also got a double bottom with here and here. Okay, so that means that twice the bulls were able to defend this area and say, nope. Bears, you do not get to pass. Bears, you will not pass. Right? And the Bears got through a couple points further than here, and the Bulls are like, that's it. That's it. Bears were through with you. We're fucking taking over. And they did. Right? And then you got this candle, which spent almost the entire time buying. Right? Buying. You go to a shorter time frame. Look. Bought. Go to a 1 minute time frame. Boom. Bought. Okay. So that's what we're seeing here. 5 minute chart, 2 minute chart, 1 minute chart. Okay. You see it? Strong buying. That's what we're seeing. Reasonable long entry. What do I think is going to happen here? I think the Bulls will buy 50%. I think the price will go right here and we'll bounce and we'll move up. That's what I think. Do I know? No, but that's what I think. Which means your entry long would be there. That'd be your best entry long. %, pullbacks are so commonplace. Brandon, I know, right? What the hell are those guys doing? It's because they make it all about them and not all about you guys. I'm here for you guys just as much as I'm here for me. And you know what, Brandon? It's probably because they can't explain it, right? Like, I've talked to a lot of traders. They can't explain it, which would worry me. If I can't explain what I'm doing, that's concerning. Brandon, you're welcome back anytime. (8:58 a.m. San Diego). Trend from the open, market goes sideways for at least an hour usually.
My words.
See if the bulls buy this. I want to get out of that. We'll see. We're watching that blue line. Gaps all the way down here. Keep that in mind. I know I got the best beats, right? So we want to see how this closes. See if the bulls can keep the bears from closing below the EMA. Now we've got 3 pushes down. 1, 2, 3. Possible reversal setup there. Also notice, we got to the 15 bars. That's what we want to see. We want to see strong buying through the close of this candle. Good. 3 minutes to go. ETR still 5? Yeah. Two minutes left on the candle. 223.
Oh shit.
Minute 44. Bulls buying. Bears got one strong close below the EMA. Bulls bought it real quick. Bullish. We want to see this candle close bullish, but look, 2-minute chart starting to see momentum to the upside. So let's see how this candle closes. Okay, so you're starting to see what looks like a bottom there, but let's see. A minute left. This is a reminder to myself about how important location is with trading ranges and trading reversals. It really is the whole thing. If you're buying, you want to buy below something or as close to it as possible. And we bought a 50% pullback of this, which was not the best entry, but it's all good.
BeatStars.com.
All right, so the bulls look like they'll get the close, but let's see if it's enough for more buying. It's a very weak close. So this is a decision point here. Right at that EMA. Looking for some up after 3 legs down. We'll probably get some up. 3:30.
BeatStars.com.
It's the tricky thing about trading ranges. You never know exactly where the bottom is. The bottom or the top. You can get some idea. It's hard to know exactly where. Patience. This is exactly what we want to see. Through the close. 2 minutes left on this candle. This is a kind of ugly looking wedge, but technically it's a wedge because you got 3 pushes down. Now the question is, am I comfortable holding this trade, or do I want to get out break even? Important decision to make. Will we even get a chance to get out break even? We'll see. Looks like we might. This looks like a pivot to me. Let's see. Okay. That's what we want. We want the market racing up in the last sort of, the last minute. Trying to get there. 2 minute chart. Struggling. "30 seconds. If something really convincing happens, I'll adjust this guy. But so far, five, 4, 3, 2, 1. Okay, decent, but didn't close above 32, so that's not good. I do think we'll get some more up here, but
Mark my words.
I want to break at that red line. EMA still holding. All right, so that brings us to, just over 2 hours. It's been good riding with you guys. I appreciate you being here. Thanks for helping me build this community. Like and subscribe. And end the stream here. I appreciate you guys. We'll see you on the next one.